time is running out, and the clock is ticking ominously for those who have yet to address gaps in their national insurance records. The deadline to take action is April 5th of next year, and both the Department for Work and Pensions, DWP, and HM Revenue and Customs, HMRC, are bracing themselves for an overwhelming surge in demand from anxious citizens scrambling to secure their financial futures. The stakes are high, and failure to act could significantly impact your state pension, leaving you with far less than you anticipated. Under current regulations, you need a minimum of 35 qualifying years on your national insurance record to claim the full new state pension. If you fall short, you may find yourself staring at a drastically reduced pension. Even to qualify for any payment at all, you'll need at least 10 years of contributions. But what happens if your record has gaps? You could face a financial nightmare, receiving a fraction of the pension you were counting on. The good news is that you have the option to make voluntary contributions to fill those gaps. But this opportunity won't last forever. Initially, the deadline was set for April 5, 2023, but due to public outcry, led in part by ManyExpert.com founder Martin Lewis, the deadline was extended first to July 2023 and now to April 2025. This extension has caused a frenzy, jamming phone lines at the Future Pension Center as people rush to understand their options. Currently, you can retroactively buy back missing national insurance years dating back to 2006. However, once the deadline passes, you will only be able to make contributions going back 6 tax years. Miss this opportunity, and you could find your state pension payments slashed. As the deadline looms closer, HMRC and the DWP are preparing for a wave of inquiries and requests. James Murray, the Exchequer Secretary to the Treasury, has acknowledged the expected surge in demand and assured the public that measures are being implemented to manage the influx. These measures include resource allocation, the introduction of callback options, digitizing forms for overseas individuals, and utilizing interactive voice response systems to streamline the process. For those who prefer a more personal touch, the Future Pension Center and National Insurance Helpline will remain operational for those unable to navigate online services. Earlier this year, both departments rolled out a joint online service that allows individuals to check their state pension forecasts and purchase the necessary contributions to fill their gaps. This was a significant improvement over the previous system, which required multiple phone calls and extensive waiting periods. Previously, individuals found themselves ensnared in a tedious and often frustrating process just to understand their options. It involved contacting the Future Pension Center to discuss which years could be topped up, obtaining an 18-digit reference number from HMRC, and then waiting for the DWP to update the national insurance record and revise the state pension forecast. The previous system was described as cumbersome and nearly unusable, with many struggling to get through to the phone lines due to overwhelming demand. Now, with the new digital service, you must log in using your personal tax account details. If you don't have an online HMRC account, registering on Government.UK is your first step. However, this initial version of the service has its limitations. If you've already begun claiming your state pension, or if you're seeking to fill gaps from self-employment or overseas work, you won't be able to use this new feature. Therefore, it's crucial to start addressing any gaps in your record as soon as possible, allowing yourself enough time to navigate the system before the deadline. The urgency cannot be overstated. As the DWP and HMRC prepare for the onslaught of inquiries, many will undoubtedly face long waiting times and potential frustrations. Don't wait until the last minute. Take the initiative to check your national insurance record today. If you find any discrepancies or gaps, act swiftly to secure your financial stability for the future. The consequences of inaction could haunt you for years to come, potentially resulting in a state pension that falls woefully short of what you need to live comfortably in retirement. In conclusion, the April 5th deadline is a wake-up call for anyone with a national insurance record. The time to act is now, before the tidal wave of demand hits the DWP and HMRC. Don't let this opportunity slip through your fingers. Assess your situation, make those voluntary contributions, and ensure you're on the path to receiving the full pension you deserve. The clock is ticking, and the stakes are too high to ignore. Get it done before it's too late.